Welcome to the deep dive. All right, so today we're going to be looking at the financial markets as they stand on December 6th, 2024. And you've given us a ton of really great information here, news articles, data reports, everything from, you know, how stocks are fluctuating in crypto volatility
Yeah.
to like billionaire investment strategies and big moves that corporations are making. So expert speakers ready to help me kind of like decode all of this for our listeners?
Oh, yeah, absolutely. There is a lot to unpack here, but, we'll make sure we hit, what's most relevant, interesting for everybody and try to highlight like the key trends and, kind of what they might mean.
Okay, perfect. So let's just jump right into it.
Mhm.
It looks like kind of overall the markets are down a little bit today.
Yeah, they're definitely looking a little sluggish. If we look at the major indices, we see the S&P 500 is down slightly, and then the Dow Jones is seeing a bit of a larger dip. The Nasdaq is also down, and then the Russell 2000, which focuses on smaller companies, is actually seeing the biggest drop today.
Okay, interesting. But then I'm also seeing that crypto is kind of defying the trend. Like Bitcoin and Ethereum are both up today.
Yeah, that's right. It's a pretty striking contrast. While those traditional markets are dipping into the red, crypto, at least for today, seems to be holding strong.
Hmm. Okay, but I do want to touch on the crypto liquidations that happened.
Mm.
We're seeing headlines about hundreds of millions of dollars in Bitcoin and Ethereum long positions just getting completely wiped out. So can you
Right.
kind of walk us through like what exactly happens during a liquidation?
Yeah, so basically imagine you're a trader and you borrowed money to, bet on Bitcoin going up. It's like taking out a loan to kind of supersize your potential gains. But then suddenly the market like takes this unexpected turn and Bitcoin starts to plummet. So if the price falls below a certain point, basically a point where your lender is like getting really nervous, they're going to automatically sell your Bitcoin to, protect their investment. And that's essentially a liquidation. You're kind of forced to exit your position. And a lot of traders can end up, reeling from that.
Yeah, so it's kind of like a big game of musical chairs, right?
Mm-hmm.
And when the music stops, some people are left without a seat.
Yeah.
But why are we seeing like so many of these liquidations happening all at once?
Well, it really comes down to leverage. That borrowed money we were talking about that can really magnify your wins, but it can also, magnify your losses. So when you have all of these traders that are over leveraged, meaning they've borrowed way more than they can handle, even like a small market wobble can trigger a cascade of these liquidations. It's like a chain reaction where one domino falls, and it knocks over a ton of others.
Okay, that makes sense. So it definitely sounds like crypto is not for the faint of heart. Let's shift gears a little bit though, and talk about oil prices, which seem to be slipping even after OPEC decided to hold off on increasing production. So I mean, you'd think that would give prices a little boost.
Right.
Yeah, you would think that, but the market can be a little unpredictable. It seems that that delayed production increase just isn't really enough to alleviate the fears of a potential crude oil surplus. Investors are still kind of trying to make sense of everything, and there's just this lingering concern that we could still see, a surplus even with that decision.
So what does that mean for people like us? Should we be expecting to see like even higher gas prices?
Well, it's definitely something to watch. Oil prices can have these ripple effects. If they rise, it can fuel inflation, it can push up transportation costs, and, it can even impact how much people are spending overall.
Right, right. So it's a good reminder that what happens in one area of the market can really impact other things. Now, I did want to talk about billionaire investors. According to UBS, they've been outperforming the market for a while, but it looks like they're changing their focus.
Yeah.
So instead of trying to get those really high returns, they're more focused now on wealth preservation.
Yeah, that's right. It makes sense, given where we are in the market cycle. After this period of like really robust growth, it's natural for investors to want to
Yeah.
to prioritize protecting what they've already earned, especially, those who have really substantial assets.
Okay, but what does that mean? Like, how do you preserve your wealth?
Mhm.
Are they stuffing cash under their mattress?
Well, it's a little bit more sophisticated than that. Think of it like building a financial fortress,
Hmm.
They're diversifying into assets that aren't, as vulnerable to market swings. Things like high quality bonds, real estate, even precious metals, like gold, which a lot of people see as safe havens during times of uncertainty.
Interesting. So they're not like completely pulling out of the market. They're just kind of, repositioning themselves to try to weather any potential storm.
Exactly. They're focused on preserving that capital and ensuring, its longevity.
Okay. Now, I also wanted to touch on some of the potential changes we could see with the S&P 500. It seems like, there are some big companies willing to, be a part of that elite group.
Oh, yeah, that's right. Companies like Coinbase, Block, Robinhood, and Vertiv are they're all vying for a spot in the S&P 500. And, getting included in that prestigious indexes, it's kind of like receiving a golden ticket in the financial world.
Yeah. I mean, why is that? Like, why is it so special to be in the S&P 500?
Well, it's really about visibility, and the power of attraction. So the S&P 500 is one of the most widely tracked stock market indices globally, and it really influences a lot of investment decisions around the world. So when a company gets a spot on that index, it's kind of like they're stepping onto, a really grand stage. And it attracts the attention of all these big institutional investors and fund managers, and that can translate into higher demand for that company's stock, boosting the price
Yeah.
and enhancing their overall market value.
So it's kind of like getting a stamp of approval, right? You're one of the big guys. And I did want to mention Lululemon seems to be doing really well. Their stock is on a tear after multiple banks raised their price targets.
Yeah, they're definitely on a roll. Their move to brighter colors seems to have, really resonated with people. And 16 banks raising their price targets that's a pretty strong vote of confidence.
Okay, so it sounds like they're doing really well, but isn't there always, someone who's a little more skeptical?
Well, at least one analyst is advising a little bit of caution. They recommend selling into the rally, which basically means, capitalize on the price surge, sell some shares to lock in those profits before there's a potential correction. They're concerned that the stock might be getting a little ahead of itself and its price could be exceeding its actual value.
Interesting. So it's
So,
kind of like, do you ride the wave and risk getting, wiped out?
mhm.
Or do you play it safe and potentially miss out on more gains? It's a tough decision.
It is. It is. It's all about, balancing that risk and reward. And it really depends on your investment goals and your risk tolerance.
Right. Now, another area that seems to be doing well is the airline industry. Both United and Delta are seeing their stock prices go up. And this seems to be fueled by, the huge demand for holiday travel.
Yeah, after years of restrictions, people they're definitely ready to get out there and explore again. And the holidays are always, a really busy time for travel. So this surge in demand means higher ticket prices, which translates to, more profits for those airlines.
Okay. So it sounds like the travel industry is back. Is this, is this a sign that the economy is also doing well?
It's definitely a positive indicator, consumer spending, especially on things like travel, things that people don't absolutely have to buy. That's a big driver of
Oh,
economic growth.
okay. And speaking of optimism, I did want to mention that it seems like some analysts who were previously, pretty pessimistic about the market, they're starting to change their tune. In fact, David Rosenberg even apologized for his bearish stance on the stock market.
Yeah, that's right. It seems like, with the market exceeding expectations, even some of the most, even some of the biggest pessimists are starting to change their minds. We're seeing big companies like Morgan Stanley and JP Morgan also shifting their forecasts. They're definitely sounding a lot more optimistic.
Okay, so are we all bullish now? Is everything smooth sailing from here?
Well, I wouldn't go that far. While there is this growing sense of optimism, some experts are still urging a bit of caution. Ed Yardeni, for example, he's concerned about just how bullish everyone is.
Okay, so why would too much optimism be a bad thing?
Well, it can be, it can be a bit like a sugar rush. It can create this, kind of distorted view of the market, and that can inflate asset prices, push those prices beyond their actual value, and that can set us up for a potential correction.
Okay. So even when things are looking good, it's important to be a little bit skeptical.
Exactly. It's all about, finding that balance, acknowledging the positive signals while also being aware of those potential risks.
Right, right. Okay, so let's talk about the tech industry. UiPath,
Yeah.
which specializes in automation software. They saw their stock drop even though they beat earnings expectations for Q3.
Yeah, it might seem counterintuitive, but
What?
it all comes down to expectations. So while they surpassed earnings predictions for that quarter, they didn't raise their guidance for the future, and that disappointed investors who were expecting, even better projections.
So in the tech world, it's not just about doing well now, right? It's also about giving people a really good picture of what you're going to do in the future.
Yeah, investors in the tech sector are particularly sensitive to those forward-looking statements.
Okay. Now, I did want to mention some activity in the mining sector. SSR Mining has acquired the Cripple Creek and Victor gold mine from Newmont. And I'm just curious, like, what are the implications of this?
Well, this was a really strategic move by SSR Mining. It could significantly boost their position in the gold mining industry. So, they're increasing their production capacity, adding this really valuable asset to their portfolio.
So are they basically betting on gold?
Well, it certainly suggests that, they see gold as a valuable asset. This acquisition could be driven by a number of factors, including, the demand for gold as a safe haven asset, the potential for price appreciation as inflation concerns linger, and their desire to just diversify their operations.
Okay. Well, we've covered a lot from market trends and, crazy crypto swings to billionaire strategies and these big moves that corporations are making. But we're just getting started. We're going to take a quick break and be back in a few to dive even deeper into specific sectors and what they mean for the rest of the world.
So, should we pick up where we left off with, the tech sector?
Yeah, that sounds good. It's a sector that's, always evolving and changing so fast. It seems like there are always new investment opportunities popping up.
Yeah, absolutely. And, along with those opportunities come, a whole host of challenges. We talked about UiPath and their stock dip. Even though they exceeded earnings expectations, it just goes to show how much scrutiny these tech companies are under. Investors just have these really high expectations.
Yeah, it's like they're constantly being watched.
It is, It's not enough to just perform well in the present. They have to convince investors that they can sustain that growth, well into the future.
Right. And if there's any, hint is a slowdown.
Investors can get spooked really easily.
Yeah. So for, investors who are maybe looking to get into tech, what are some things that they should be keeping in mind?
Well, I would say, do your homework. Don't just jump into the latest trendy tech stock because it sounds cool. Really take the time to understand, the company, their business model, their competition, and most importantly, their long-term growth prospects. Not every tech company is going to be, the next Apple or Microsoft.
Right, right. It's easy to get caught up in all the hype, but
You gotta cut through the noise.
yeah, exactly. Okay, so let's move on to the energy sector. Oil prices are definitely making headlines, and OPEC's decision to, postpone production cuts. That's added a lot of uncertainty.
Yeah, it's a complex situation. Energy companies are in this, tricky position where they need to. They have to respond to these price fluctuations, but they also need to be thinking long term, about things like sustainability and the shift to alternative energy sources.
Right. So it's like they're playing this, this long game.
Exactly. And the outcome is going to have, these ripple effects, not just on energy stocks, but on the economy as a whole.
Right, because oil prices impact so many things like inflation and transportation costs.
Yeah, and even consumer spending.
Right, right. Okay, so let's go back to, the world of finance and those wealth preservation strategies that we were talking about. We talked about diversification, but I'm kind of curious, what are some of the more, maybe unconventional things that these really wealthy individuals are doing to protect their money?
Well, they're definitely not just sticking to, stocks and bonds and real estate. They're looking at things like alternative investments, things like private equity, hedge funds, even, collectibles like fine art or rare wines.
Okay, so those sound pretty inaccessible to most people.
Yeah, some of them do require, a significant amount of capital to get started, but there are still some key takeaways that, anyone can apply.
Like what?
Well, I think the main thing is just to be open to different types of investments, Think beyond those traditional asset classes.
Right. So it's not necessarily about copying exactly what they're doing, but more about the overall approach.
That's a great way to put it.
Okay, so we've talked about tech, we've talked about energy, we've talked about finance. How does all of this, how does it all fit together on a global scale?
Well, it's all interconnected, right? Think of it like an ecosystem where everything's, influencing everything else. Take, for example, those crypto liquidations. That can actually have a spillover effect on traditional markets, you know? It can impact investor sentiment, liquidity.
So even though they seem like separate things,
They're not.
right,
We're all part of this, this global system.
and everything's kind of connected.
Exactly.
Okay, so given all of this,
Yeah.
what's the outlook for the global economy?
Well, there's definitely a sense of, cautious optimism. Equities have been pretty resilient, but there's still the potential for, corrections, especially if we see, any unexpected economic data or geopolitical events.
So it's a mixed bag. So how can investors, how can they navigate all of this?
Well, I think the most important things are diversification, due diligence, and a long-term perspective.
Can you break those down a little bit?
Sure. So diversification, that just means spreading your investments across different asset classes to reduce risk. And then due diligence, that's just, doing your research, making sure you understand what you're investing in.
Right.
And then finally, the long-term perspective. That's all about not getting caught up in, the day-to-day fluctuations of the market. You got to stay focused on your long-term goals.
Okay, so even when things are, feeling a little crazy.
Just stay the course.
Right.
You don't have to be an expert to be a good investor. Just stay informed, be aware of the risks.
And don't panic.
Exactly.
All right, well, we've covered a lot in this episode.
We have.
We've talked about market trends and, how volatile crypto can be. We've decoded billionaire strategies. And we've looked at, the global implications of all of this.
It's been a pretty comprehensive deep dive. So are we ready to wrap up this deep dive?
Yeah, I think so. As we kind of tie everything together, what is the, what's the one big takeaway that you want our listener to, to walk away with today?
That's a good question. I would say awareness is key. Today's market is just so dynamic. There's so many opportunities, but it also comes with a whole web of risks.
Right. So you really got to stay informed.
Wow.
And be ready to adapt as things change.
Exactly.
One thing I keep thinking about is that that apology from David Rosenberg for being, so bearish on the stock market. It's not every day you see a well-known analyst admitting that they were wrong.
Yeah, it is pretty unusual. And, especially considering that other big firms like Morgan Stanley and JP Morgan, they've also changed their tune and are they're sounding a lot more optimistic these days.
Right. So, it just makes you wonder, what is it that's causing them to, change their minds?
Well, it seems like they're recognizing that the market has been more resilient than they expected.
Right. So they're acknowledging that, there's potential for more growth.
Yeah, but it's important to remember that, even the most experienced analysts, they don't have a crystal ball. Their opinions are just, one piece of the puzzle.
Right. So it's important to not just blindly follow, what one person says.
Exactly.
Now, I also wanted to circle back to Ed Yardeni and his cautionary words about too much optimism. It's interesting because he's actually been pretty bullish himself this year. So for him to be, expressing caution now, that's pretty significant.
Yeah, it definitely makes you think, as we talked about earlier, when everybody gets really overly optimistic, it can create this, this kind of fragile foundation.
Right, because everyone's just assuming that, things are going to keep going up.
Right, but the market doesn't always work that way.
So should we be selling everything and hiding under our beds?
No, not at all. It's not about panicking. It's about, being prepared and staying flexible.
So, going back to those three principles that we talked about.
Diversification, due diligence, and a long-term perspective.
Right.
Those are your tools for navigating any market, whether it's going up or down.
Okay, so as we wrap up, I kind of want to leave our listener with, one last thought. We've talked a lot about, how external forces shape the market, things like, oil prices, interest rates. But what about, the role that we each play? Every decision that we make, whether it's, buying a stock, selling a stock, even just, spending money in general, all of that contributes to, the overall energy of the market.
Yeah, I like that. We often think of ourselves as, just passive observers, but
Right.
we're all participants in a way,
Yeah,
and our choices have an impact.
Yeah, so it's important to remember that we're not just along for the ride.
Right. We can actually shape our own financial future.
Okay, well, we've covered a lot in this deep dive.
We have.
We explored market trends. We looked at, the ups and downs of crypto. We even decoded some billionaire strategies. So I hope our listeners are feeling
Yep.
a little bit more informed and maybe even a little empowered.
Me too.
So
Okay.
as we head into 2025, I would just encourage everyone to, take some time to think about your own, financial goals.
Yeah, that's great advice.
And,
Yeah.
what steps can you take to create a more secure future for yourself? Until next time, happy investing.